This is a lecture from Open Tuition.
Hello, this video is going to go through and debrief the question Pirlo from the March-June 2019 sample financial reporting paper. Again, like the other video that I've done, it isn't going to go through and cover the technical elements. It's more of a focus upon what you should be writing and how you should be approaching it from a computer-based exam approach. So what you can see there is that you have three parts to the question, A, B and C. Part A is wanting some calculations on gains and losses on disposal of a subsidiary. And it's key there that you identify that in part A of those two parts, the first bit wants it within the individual financial statements, while the second bit wants it within the group financial statements. So remember that the legal form is what we look at within the individual financial statements. So we'll be looking there at the proceeds less the cost of the investment, because that's what's happened. We have disposed of an investment in the individual account of the parent. But within the group account, remember, we are looking at the substance of that transaction. And the substance of the transaction there is that we have received some money on the disposal of a subsidiary. And when we dispose of that subsidiary, we are disposing of its net assets and the goodwill. In part B, we're going to go through there and look at some ratio calculations. So it's looking there at the ratios that are given in note 8. So if we scroll down to note 8, you can see that your luck was in this exam there, because it wanted you to work out gross margin, operating margin, and your interest cover, which if you can't calculate those in the exam, then you may as well just leave the exam room straight away, because they are three of the easiest margins that you are likely to go through there and get within an exam. Again, just note, be very careful. In part B, it says that no adjustment is required for the gain or loss on disposal from part A. So whatever figures you've got in part A, it doesn't matter. You can just go through there and just head straight in there to do part B. Part C is the analysis of your financial statements. So here it specifically wants you to comment on the performance. So looking there at the revenues, looking at also your gross margins, your operating margins that you'll have calculated in part B. It also wants you to look at as well at the interest cover. So again, that's asking you to comment upon the ratio that you've calculated there in part 8. And then when you're making your answer, it wants you to look at the overall performance of the group. So analysing, if you like, what you have there with regards to the Pirlo group financial statements for 20x8 and 20x9. It also wants you to mention as well, once you've accounted for the disposal of Samba, how that will impact on your analysis. So we will have, presumably, up here, a profit or loss in the individual accounts. We'll have a profit or loss in the group account. So again, we'll need to analyse how that will impact overall our group accounts. And then what does it then think about for the future? So once you've disposed of Samba, there won't be any revenues, there won't be any costs, there won't be any profit consolidated of that subsidiary. So therefore, how are we going to go through then and see how the group results are going to change? So there's quite a lot to go through and consider. The way in which I do it is just get yourself off to a pretty good start and do part B first. Okay, because it wants you to go through there, doesn't it, and have a go at performing some ratio calculations, nice and straightforward. And the reason why I can do B first before part A is because it doesn't ask you to make any adjustment for the gains or loss on disposal. So what you can see there, in terms of the way that you answer it, you're not given a spreadsheet, you're just given a blank page of paper, because the majority of the question is going to be written. But what you can go through and do there is you can click on the answer, you can write part B, and then what you've got there is you've got your gross margin. We've then got, was it my operating margin? And then you've got there, you've then got your interest cover. Okay. I'm not going to go through actually and do any detailed calculation on this because I just think it was so straightforward. So what you've got there, the gross margin in 20x9, it takes your 97860 gross profit and divides it by the 213480. So what you could write technically, is write 97860 divided by 213480 equals, is it 45.8%? Okay, that's fine. Okay, obviously you need to do the calculations using the calculator. So there you've got the calculator. So what have we got? Personally, I just put as a standard one, nice noddy one. So you've got, is it 97860 divided by 213480 equals 45.8%. Okay, or 0.458. There we go. Now, there's 3 marks available for all of these ratios. Personally, I wouldn't waste my time putting in the calculation, because if you don't get the calculation right, you get the wrong number, and they're not going to go through that and give you any additional marks. Okay, just because you've written the numbers in. So again, for x8, you've got the 97310 divided by the 216820. Again, allow you to go through and do that in your own time using the calculator, and away you go. Okay. For your operating margin, it takes your profit from operations, so that's the 25500 divided by the revenue of 213480. Again, you can tap that onto your calculator. So I've got 25500 divided by 21340 equals 11.9%. Again, I wouldn't even write that out within the exam. I'd just be there 11.9%, because if I get 11.9%, I'm going to get the half mark. If I have something else, I have got it wrong. Okay, you're not going to get partial credit. And then for x8, you've got, is it the 29170? Oh, careful. 29170 divided by the 216820. Again, I'll allow you to do that in your own time. That's 13.5%. Interest cover. So that's looking at how many times can you pay out your interest expense from your profit from operations. So your profit from operations is 25500. And again, I'm just writing this out for demonstration purposes, divided by your interest expense, which is your finance cost, at 17,800. So on my calculator, if I do 25500 divided by 17,800, what have I got? That's 1.43 times. Okay. Again, it's key to put in times because it's not a percentage. It's the number of times that you can pay it out. And again, just throw it in there without the narrative. Don't even write out the formula. Even if you write out the formula correctly and get the answer wrong, you get no credit whatsoever. For the next year, x8, 29170 divided by 16200. So 29170 divided by 16200 equals 1.8. There we go. Excellent. So there you have it. Again, just to draw it to the examiner's attention, I just put part B there in bold. You don't have to. It's entirely up to you. Now, what I would then go through and do is I'd do part A. Hopefully you're at rest, if you like. You've eased yourself into this question by having done the easiest bit first, the ratios. Part A, in the individual accounts. Again, remember, that's nice and straightforward. That just goes through there and takes your proceeds less the cost of the investment. So the proceeds were 300 million. The cost of the investment was 210. Does that give me the $90 million? Okay, really straightforward. The 300 comes from part 1. And then is it the cost of the investment that we've sold is there at 210 million. So nice and easy, 300 less the 210 gives me 90 million. Oh, careful, we'll just put A there in bold so they can see. You don't have to, that's just me being the way that I am. The next one that you've got then, however, is your group profit on disposal. So in the group, what have we got? Let's just do a little working. It's up to you. I'd set out a pro forma. You've got your proceeds. You then add on your NCI. You then deduct the net assets, and then you deduct the goodwill, don't we? Okay, nice and straightforward. So what have we got? My proceeds, well, we know that's the same figure as from the first part of part A. The non-controlling interest, what have we got there? Is that there is 66. So you can see there is it parts, can I remember part 5? The non-controlling interest in Samba was there at 66. The net assets, you just need to be careful on the net asset. Just a quick calculation, because it says there is it in part 4. The net assets had a carrying amount of 260 million. So we'll start off with the 260. However, there is a brand name, so there is an intangible that was acquired. So IAS 38 says that cannot be recognised in the individual financial statements. So that's correct. Okay, that's not reflected in the individual financial statement under IAS 38. But IFRS 3 says that we can recognise it at acquisition, provided that it has a fair value that we can measure. And here we've measured it at $50 million. Just note, that was what it was at acquisition. It is the same at December X9 when we have disposed of it. If it had changed, we will put in the value that we have at the date of disposal. So 260 plus 50 is 310. And then the goodwill. Again, just note the goodwill that you've got there. That's 70 from part 3. It does try to throw you a bit by saying, look, the goodwill at the disposal date is 110. Couldn't care less what it is at the disposal date. We can only impair goodwill and reduce it in value. We can't measure it upwards and revalue it once it has been acquired. So again, what we go through and do then is you total that up on your calculator. So again, you can get the calculator out, keep it simple, keep it with the standard one, and away you go. So what have we got? 300 plus 66 less 310 less 70 gives me negative 14. Be very careful there. That negative sign is hidden on the left of the calculator. So that therefore means that you have, is it, a loss. So within the group, you have a loss of, is it, $14 million. Okay, excellent. I think there's 5 marks available in total for those calculations. I would work out, and it doesn't say how within the model answer, but I'd say there's 1 mark for the individual profit or loss on disposal, and then in the group, I think that would be where the remaining 4 marks are. Maybe 1 mark for the proceeds, 1 for the NCI, 1 for the net assets, 1 for the goodwill, but that's just purely guesswork. Okay, excellent. So now on to the favourite bit, part C. And you've got to really make sure here that you go through and give yourself enough time to be able to answer the question. Okay, so what I will go through and do there, first of all, is use headings. So I've got there my performance, and then within my performance, I'm going to have revenue. Okay, so again, show that they are headings, underline them. It helps the market see what you've written. So what have we got? Well, what's happened to the revenue? This is what you're starting off with. You're starting with the top line. So revenue has fallen. So you think, well, revenue's fallen because we've sold less. Probably the case, but you're not given that information within the question. What you need to use is part 7 of the information. Okay, is it part 7? Let me just go through there. No, part 8. Okay, I can't read my notes correctly, because in part 8 what it goes through and says there is it tells us that Samba, the subsidiary's revenue, has stayed the same in X9 and X8. So if that's the case, if Samba's revenue stayed the same, then the Pirlo group, the remaining group companies, must not have performed as well. So let's put that in. So how would I write it? Well, state the obvious. Revenue has fallen. Let's say in the group. But this is not due to Samba's performance, as its revenues have stayed constant at $26 million. So the fall in revenue is due to the other companies within the group. Okay, could you write that? I think you could. I don't think that's anything too challenging, too difficult, is it? Okay, so that's a good start. So I've got my revenue. Okay, I've thought about the overall group performance, and by talking about Samba at 26 million and the implications then of the other companies, then that's covered all bases in part C on revenue. Next heading, again, I'm just working my way down the page. Gross margin will be what I will be looking at next. So again, what information have we got? Well, if we look at Samba, Samba's got quite a high gross margin at 81, and it's remained reasonably static from last year's at 80. If we look at our numbers have gone up slightly as well, but the overall gross margin for the group, which includes the results of Samba at this moment in time, are a lot lower. Okay, so let's just state those facts first. So gross margin has increased for the group, but is lower than that of Samba. So the other companies within the group must be selling at a lower margin. Okay, we don't know why the margins have gone up. You could make a guess, but there's nothing within the case study to go through and justify that. Okay, so let's just stick to what we have within the case study. And the way in which I'm looking at the moment is I'll be thinking that I'm getting at least a mark for each. I think 2. Okay, because I'm looking at the overall performance. We've mentioned Samba, and we're thinking there about the future as well. In terms of the operating margin, I think this is really where you're going to go through and gain a lot of the marks. Why are we going to gain a lot of the marks on the operating margin? Well, the reason being there is because there's a lot of information given to you within the question. If you have a look at is it part 6, it tells you quite a bit of what's happening there, because in part 6 it talks about a profit of 2 million, which is included in admin expenses. And it also talks as well about Samba having a reduced rent within its admin expenses as well. Okay. Again, what have we got? Well, we can see that for Samba, it's had a really good performance here, hasn't it? Because its operating profit margin has increased. Well, it's going to increase if you've got an additional $2 million profit in there. It's also going to improve as well if you've got that reduced rent within there as well. Okay. Again, what have we got? Overall, you can see here, you've got, is it a fall in the operating profit margin? Is it there for the group? Okay, excellent. So let's go through, find out what we have there. So my operating profit margin. So operating profit margin has fallen for the group. And will fall further once we include the 14 million loss on disposal of Samba. Okay. And we haven't included those results, and if we include that 14 million, that's going to reduce our profits and therefore reduce the margin. Okay. Also, as well, we can look at Samba. So Samba's margin has increased due to the 2 million profit on the properties. And the reduced rent on Pirlo's office space. Okay, so again, I'm scoring good marks there because I'm using the information that's given in the question with regards to profit on the properties, and if you like, the reduced rent, and also using our information that we've got from part A of the question. Okay, excellent. If you want, you can throw in another sentence there that starts talking about how things are going to be in the future with regards to the fact that our margins will be a lot worse once we take out those positive margins from Samba. But let's move on. You can end up starting to write too much information. Interest cover. Again, let's put that underlined as a separate subheading. Okay, excellent. Interest cover, what has gone through and happened there? Well, it's back up, isn't it, to the information. Here you can see the interest cover has fallen. We can see that for Samba it has improved. And we can see there that Samba has high levels, is it there, of debt. Okay. So if that's the case, let me just move back down to where we were. We can see there that interest has fallen for the group. Why has the interest cover fallen for the group? Well, it's because there isn't it the increased finance costs. Okay, yeah, the interest cover's fallen for the group because of the increased finance costs. Why have the finance costs gone up? Well, the finance costs have gone up because of Samba's high level of debt. Okay, but once we've got rid of Samba, that's going to improve things ever so slightly, isn't it? Okay, so what have we got? interest cover has fallen for the group because of the increased finance cost from Samba's high levels of debt and lower operating profits. Okay, remember, if you can, you're thinking about the because, and the because then starts thinking about why. So the reasons why is you've got your higher finance costs and you've also got their lower operating profit, so it is going to fall. Okay. What then happens is that once Samba has been disposed of, then the interest cover should increase for the group as Samba has lower interest cover and high levels of debt. Okay, excellent. There we go. So as you can see, we're working our way down. We started at revenue, we've talked about gross margin, we've talked about operating margin, we've spoken about interest cover, but just be very, very, very careful that you don't stop there and bring in a conclusion, because we haven't yet finished, have we? You know, we've still got to go through. I wouldn't talk about interest income. It hasn't moved much, has it? Profit before tax, profit for the year, they've fallen significantly. And look at this line there. You could easily miss out that share of profit of associate. Okay, so how would I ensure I get that in? Well, what I would do then is I would then talk about your profit for the year. You may even wish to talk about that overall at the start, but that's up to you. So what's happened with my profit for the year? Well, overall profit has fallen from 14.6 million to 11.8 million, and this fall would be more if we include the 14 million loss on disposal, and also the increase in associates' profit, which has increased from 3.2 million to 4.6 million. Okay, so things are bad. They would look even worse because the overall profit has fallen down to the 11.8 million. It would be more if we included that 14 million loss on disposal, and also the increase in associates profit, which has increased from 3.2 million to 4.6 million. Without that increase, that profit for the year would be even less, wouldn't it? Okay. Whatever you do, don't forget to put in a conclusion. So concluding overall on our findings. So what's happened? There's been a disposal of a subsidiary. Is that disposal of the subsidiary a good idea? Well, it's got really healthy margins. They're increasing. It's got revenue that's remained stable at the 26 million when the rest of the group isn't performing as well. Something that we haven't mentioned, we can mention maybe about the directors moving from Samba to Pirlo. But I think overall, when you look at it, it's not the brightest idea, is it? To remove this pretty well performing subsidiary Samba. So what I'd finish with is that the disposal is surprising, given that Samba has healthy margins and has performed well on a stable revenue base. The only thing that you could think might work in Pirlo's favour is that the directors have moved from Samba to Pirlo. It is hoped, therefore, that the transfer of the directors from Samba to Pirlo can help the group's future performance, as otherwise it will face a challenging future. There we go. Excellent. Is it enough to score 12 marks? I'd have thought so. I've got quite a few points within there. I think I've covered all the bases from the actual scenario. I've got the ratios right. I've got the gains and loss right. The key bit that you've got to do is make sure that you have the time available to do so. So think about your approach. I definitely do the easiest bits first. So that's the ratios. Once I've done the ratios, I then start thinking about the calculation of the gain and loss on disposal, because without that, I can't really answer part C. And then make sure that you give yourself enough time within part C, using the information from the question, using the headings, using the subheadings, and you can score well upon this question. Hope you found that useful, and I'll see you all soon. Good luck.